Hello everybody, Florida Investor here. I know it has been a while since I haven't posted a video, but I haven't forgot about you guys. I appreciate your support, appreciate your my subscribers for supporting me and watching my videos. And if you're not one of them, you haven't subscribed to my channel, please do, as I'm gonna continue to try to post as much good information as I can regarding stocks in general and financial information. And again, just as a reminder, this is not financial advice. This is just for entertainment purposes only. But I wanted to point out a particular ETF that I personally like, and starting investing in this particular ETF, and it's the Schwab US Large Cap Growth ETF, or the ticker symbol SCHG. Now, from Schwab, SCHD for dividend, that is a very, very good ETF that probably most people recognize. But SCHG, it's actually the growth version of it. Now, when you guys compare the performance of both, you guys are gonna notice that this particular ETF that I have here on my screen is actually the growth one. It's heavily invested in, it's pretty diverse, and obviously invest in companies that are supposed to, of course, grow. And but I believe like 40% of the ETF is actually in tech, which tech historically has the biggest upside. And then it has other sectors like financials and healthcare, etc. So that's basically, why the growth has been tremendous, because the last decade tech has grown big time. So again, I'm pointing this ETF to you guys so you guys can do your own research and look and evaluate if it is within your goal to invest. And for me personally, it is. I'm still young. I mean, I still have at least 25 to 30 years to retire. More leaning, or closer to, I'm leaning more towards the 20. Obviously, that would be nice if I can retire before 60. But so in my case, nevertheless, this particular ETF is the way to go. Now, it was actually, in inception date, it was actually 2009. It focuses primarily, like I said, on the Dow Jones big large cap, 47% technology, 13% communication, 10% healthcare. So in other words, it's pretty diverse, with the exception of technology that is heavy in tech. But that's basically how it has been able to outgrow the majority of in general, like the S&P 500, etc. The expense ratio is very, very low, and right now it's sitting at kind of like in the middle of the ground of between 52-week low and 52-week high. But nevertheless, I mean, let me show you here as well. Year to year, obviously the returns are pretty good. Since 2009, it has returned on average 15.52%. The S&P 500 is it goes anywhere from 8 to 12, depending on the year. So obviously, again, this is a good opportunity here. Look into it, guys. See if this fits your style of investing. It does for me. But let me show you one more thing. Year to date is down 7%. Just like everything is down. Especially like Tesla, Nvidia, all those stocks that had massive runoffs prior to the elections. Right now, they are massively down. So the fact that this is only down almost 8% is nothing. Now, year to date, it's still up 16%. When we look at the 5-year, it's up 130%. And then when we look at the max, so since the inception, 723%. I mean, this is insane. Now, one thing that you guys may notice as well is that this particular ETF had a split. I believe it was a 3-to-1 back in at the end of last year. I believe it was October, actually, or November. So that's why the price is so affordable now. And one of the things that you guys want to actually pay attention to and see if it is your style of investing. But I wanted to point this out to you guys. Appreciate you watching. Don't forget to subscribe. Thank you guys. Have a good day.